How you guys doing? Welcome back. Today's lesson 33, the numbers behind the fundamentals that I actually use. You're going to notice as you go through your journey of what you like and what you don't like. Something like FinViz, which we're going to focus today, has so many numbers. What do you do? As we've discussed before with your edge, I wouldn't add or subtract anything once you like it. You can always add stuff if you want to later. But me, myself, I have maybe 7-8 things to look at. If those look good, or mostly look good, I usually buy in. That's probably my last step before I buy in. So we're going to look at all the fundamental numbers that I care about, how you get to them, why they matter, all those types of things today. So let's get into it. First is pretty easy. We'll discuss this in a later episode way more in depth. We're going to be talking about index and sector. Now, index and sectors really do matter. There's 11 sectors and 4 indexes I check. I check these right before I buy a stock to see if the overall sector looks good, if the index looks good, and then I can go ahead and pull the trigger from there. It's the most macro part of the fundamental analysis process that I use. And again, we'll cover this much later in depth, but again, I do worry about that when I enter a stock. Next is industry. We're going to look at some great industries. You're going to see throughout this lesson how a lot of industries, a lot of the charts look very similar. Who knew? We'll cover that, show you how to find what industry they are and why this does matter. After that, market cap. We're going to cover the large, mid, small, what's that mean, the implied volatility, the implied volume, the implied goal of these different types of stocks, and why market cap does matter, because usually your large caps are more consistent than small caps, but the moves are smaller. We'll talk about that as well today. We're first going to touch on PE ratios. Now, earnings per share is after that. EPS actually shows you PE ratios, but PE ratios is my favorite thing to look at. It's really quick. You want to see how much money you earn, so how much price compared to earnings per share. So if the PE is like $15, you're saying I'm going to give this company $15, and then I will get back return $1 from earnings. So again, it shows you what you're giving, what you're going to get back. It's great for opportunity cost. It's easily the greatest thing to look at. It's very quick. I like PE ratio the most. We'll cover that today as well. After that, EPS, earnings per share. Again, if it's positive, it looks pretty good. It's really worthless by itself, but again, with PE ratio attached to it, it's pretty easy to use. We'll cover that as well. We're also going to look at P/FCF. That's known as price compared to free cash flow. It just kind of shows you, does this company produce money? Is it profitable? And we'll cover that as well today. Really quick, easy stuff. We're then going to discuss dividends. I think dividends for a lot of day traders mean absolutely nothing, but for somebody like me, if I could swing a stock for 3 months and get paid to do it, why not? So we're going to check out dividends today. We're also going to discuss ROA, ROE, and ROI. You have assets, invest, equity, and return of those. We'll discuss which of those matter the most. I personally go for ROA and ROI more than ROE, but ROA and ROI really easy to look at. Again, those are green. That's a great sign. We're then going to check out gross margin. Basically, does this company have more profit than cost? If that's negative, that's a bad sign. But again, we'll cover that briefly. We're going to talk about floats and why float's so important when it comes to volatility and volume, but also it's just easy to know how big a company is, how many shares there are, is it going to move quicker or slower, easy stuff. We're also going to discuss short float and floats that are short and talk about how you can see if a company's being heavily shorted. Maybe there's going to be a small short squeeze there. I don't trade short squeezes, but if a company's short at 80%, it's either a bad company or again, someone goofed up and we're going to push them out. We'll see. We'll discuss that today as well. And we're also going to talk about beta and how similar it moves compared to index volatility. And we can see if you want to be easier moving or slower moving, quicker, intense. Beta will show you that as well. So all those things we're going to cover today, that's what I use for my fundamental analysis. And we're getting over all these now today in lesson 33. With that being said, let's get into it. We're going to spend the majority of our day on finviz.com. I have the elite version, but you can do everything I do with the free version as well. So we're going to start off with index and sectors. I'm not going to spend overly large amounts of time on this because I have a whole lesson coming up about gravitational forces, which is next. We'll cover these much more in depth. But while you go through this class, the 4 indexes that I use are the S&P 500, the NASDAQ, the Dow 30 Industrial, and the Russell 2000. Those are the 4 main ones. I really stick mainly to the S&P and the Dow 30 for long term, and then S&P and Russell for short term. The NASDAQ's a great indicator as well. I'm not overly, I don't really use as much, but the S&P, the Dow 30, and the Russell is what I usually use. I'll show you those real quick on a chart so you can see what I'm looking at and what I'm talking about. So this is the S&P 500. This is the mini. It's called -ES. You also have dash NQ, which is going to be the NASDAQ. You also have dash RTY, which is the Russell, and dash YM, which is the Dow 30. The reason I use the minis for this kind of charting, as we can see here with the trend lines, the regression lines, supports. I mean, my S&P here is really intense. You got a 5% pullback line. I mean, this is what I use for my charting. The reason I use the mini is that I can use SPY or IWM, whatever the actual index is, they're clean slates. I can go ahead and look at an eyeball, add stuff, check indicators and erase it, and it's not too spaghetti-like. And so this is the S&P 500 mini. If I go to SPY, it's fully clean because I can come over here, turn on some studies I want to look at, like maybe like, hey, let me check out CCI today, and it's not going to be overly. And so we can see this. We see the dash ES is exactly the same. I actually have the indicators drawn on a little bit more intense here if I wanted to. But I can come over here and I can start drawing vertical lines like, all right, that's a pullback there, it's a pullback there, pullback there. Start doing some extra stuff, and I'm not going to get my charts all muddied up and have to go back and Control Z, put too many lines, have to erase the whole thing. So I keep the SPY, IWM, whatever the index are, clean, and then I trade and actually chart on the mini futures. It works for me. It's a pretty nice little tip for you. Beyond that, there's 11 sectors. I'm not going to cover all 11 now in depth, but you have in no particular order. Energy, basic materials, you have industrials, utilities, healthcare, you also have financials, discretionary, staples, technology, comm services, and real estate. Those are the 11 things a ticker can fall into. It's going to be in one of those 11 off the bat. We'll show you RRG graphs on the next lesson, but again, you could easily start pinpointing these sectors and being like, real estate is lagging and it's really oversold. I can buy some great long-term stocks here. Or maybe, hey, XLK just crossed into leading. I could probably scalp and day trade some good technology. So sectors do matter, indexes do matter, but next to those and one step below, which is our first topic, is industry. So you're gonna notice on FinViz, which we're gonna go to first, industry does matter. There's a bunch of them, and you can see that a lot of these actually line up very well and very similar together. So let's check out industry together and why it's important when it comes to fundamental analysis. So this is FinViz. We're gonna go to screeners, and we can go to all, but industry is gonna be right here. These are all the industries of what we can trade through. You're gonna notice that a lot of these do line up very similarly. If one ticker is going down, more than likely a lot of these are gonna be going down and vice versa. The reason this is important is because you can really start to find built-in leverage for some stocks and maybe really good looking sectors. Solar has always been almost in lockstep with each other. So we go to solar, hit charts, and we can see off the bat, down, down, down. These two look similar. Up, up, down, 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 sideways, down, sideways. The same thing, down, 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 down. How many of these look like they're making what appears to be downward wedges, falling wedges here, or horizontal triangles? Almost all of them. SEDJ has the exact same formation of Nova, right? We can see that SEDJ is worth $269, but Nova's worth $32, right? This is important for leverage, how big your count is, but also, what if Nova has a better PE ratio and EPS than Sedge? You may have the same exact technical setup, but it comes a share price of fair value. One of these is probably going to be better than the other. They're not going to be exactly the same, but this does matter. That's a really good example. You can probably go to maybe like, I think airlines will be very similar as well. Look at this, down, 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 down. You can also ask why is Azul doing okay, but recently, big old sell-off. All pointed down, sideways, down, 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 surprisingly up, down. So airlines, also basically lockstep. So again, if you like an airline ticker, check the other industry and see if there's anything that has better leverage for you or better PE ratios. That does matter. That looks good. Maybe beverage or your building materials, only 14, down, up, up. Look how cleaning these up. These look all really good looking up. Minus CPAC. These all look pretty good. Reader looks pretty bad too. But these all look like they're going up. Especially something like Loma looks beautiful. CX of value looks beautiful. Some looks good here. And so just by doing industry of what you like, you can find that Loma, Some, MLM, and what looks like to be CX.